It's Christian from Serene Education with the 4 major zones update for the 31st of May 2013. Morning, guys. Hope you had a fantastic trading day yesterday. We had a lot of movement yesterday thanks to some bad figures out of the US market. And what we saw is rallies across the board for most of the crosses. Euro in particular, you can see after the previous day, a bullish engulfing candle here, that support as I mentioned. The longer she goes sideways, more likely price is going to take off. And with the US dollar figures yesterday coming out really negative, that saw the euro taking a move to the upside quite aggressively. And we're trading now past that 1300 mark, above the 1300 mark, which is a major support and resistance level. Also above this current support and resistance level here that you can quite clearly see. A February retracement area from the highs in January to the lows here in March. And you can see we're heading in towards that institution moving average up towards that 30, which is close to the 38 all-time high here. So indicator box pretty much blue, 1 or 2 areas of red, but overall the sentiment looking positive. And after the last couple of days, that buying sentiment coming through for the euro against the US dollar on weak US dollar figures. Okay, then on to sterling, same thing here again, also on the support, all-time low here just recently. Again, the intraday time frame is looking more positive than negative. The long-term sentiment is still looking negative for this particular pair, but you can see 2 very, very positive days as we had really weak figures for the US market. Also, heads up, guys, the Fed announcing that they could be tapering off their quantitative easing purchasing plans has seen a change in market sentiment, and we are starting to see a lot of profit taking now against the US dollar. So sterling moving higher as well, also moving back up towards this major support and resistance level here in the shape of the 15300 mark. And what it's doing now is it's also just trading above the February retracement from the high in January to the low we currently have in March, above the 23.6. So you can see quite clearly a lot of hesitation or consolidation along this area here. As long as she maintains above this area here, above the 15190, then we should be looking for price to consolidate with an upside view towards that 1592.35 mark as our first target, which is approximately where price is trading right now to that area, roughly around 70 pips. So enough in the tank for some upside movement. Intraday looks very much more looking for upside movement to be the fact. So as long as the support here at 15196 remains below price, if we go into our small time frames, let's look at the 4-hour particular. Let me just move that across. There we go. So you can see the current hesitation here and the breakthrough, the resistance below it. Now we've traded above it. As long as we see price remaining above this level here, you can see on the 4-hour, 20 and 50 period moving average have crossed over. We are seeing a swing high. RMO has jumped above the 0 line, and MACD is comfortably above the 0 line. Consolidating. The last 16 hours or so have been very indecisive, but as long as it takes place and stays remaining above this 156168 area here at the 23.6 fib intraday, then we should be looking for price to make a move towards this 15300 mark, which is back up towards our institutional intraday time frame. US dollar Swiss franc, here on the daily you can see a lot of hesitation as the US dollar has taken a bit of a battering over the past week or so because of what happened last week, the announcement of the Fed looking to ease up on its quantitative easing 3 plans of purchasing bonds, etc. And what it's seen now is the US dollar failing at the 23.6 Feb monthly level, and we've seen a lot of bearish engulfing candles. Primarily on on Wednesday we had a very bearish engulfing candle after a very bullish, almost a tweezer top, and we can see yesterday's candle bearish moving lower. But most importantly, now closing just below this price support and resistance level. If it maintains this view, you can see there's more negativity with true sentiment intraday. Still positive on the longer term stuff, but intraday very much looking negative. The MACD is very well below the 0 line and moving lower. The RMO is still above the 0 line just for now, but if you can see the market closing out this week below this line over here particularly, then ultimately we should be looking back towards the institution or back to this price support and resistance level area around here on the 23.6 mark, around the 9300 mark for the start of next week. US dollar Japanese yen, here a lot of upside movement. However, also the case where the US dollar has come unstuck quite abruptly after breaking above a major support and resistance level high here at the 50% retracement on the monthly time frame. Prices now, you can see, being consolidated over the past week, but a bearish engulfing candle now has taken away all that support and you can see that yesterday's candle very indecisive, a spinning top at a support. We want to see a decision candle. If we can see price moving lower, closing lower than the 50% line, then we could very well see a change in market sentiment. But as long as it maintains above the 50%, then it's still one of positives, and this is just a consolidation on the upside movement. Intraday, a lot more negativity, as you can quite clearly see, but the long-term trend still very much positive. RMO is moving its way back to the zero, but still above the zero line, which is still telling us we're in a very strong uptrend. The MACD, however, is showing negativity, and you can see that clearly over the past week we have seen prices pulling back. So as it stands now, if we see price moving lower and closing lower on our smaller time frames, i.e. like our 4-hour candle, for example, you can see a lot of indecision candles. If we get a nice juicy bearish engulfing candle on our 4-hour, particularly moving towards this to the downside, then ultimately we should be looking for price to head towards the 50% February retracement area, and then ultimately get a close below that. That will give us a true indication that we should be looking for further negativity for the remainder, well, for the start of next week and for the foreseeable future. So as it stands now, the US dollar Japanese yen moving sideways, but very close to a price support and resistance level long term. We're looking at 78 here, but towards the 50% line, you're looking at 100 pips. So in this area here, there's still swinging low, which is telling us we should be looking for negativity. There we go, swing low, swing low, swing low. Intraday, a lot more negativity than positiveness, and RMO is below the zero, and MACD is still, it's pulling back. So no trade at the moment. Now we want to see the MACD showing a nice bright red candle and the RMO getting long here, and that would tell us that price is still looking to fall lower. But as it stands at the moment now, more sentiment to the downside is very much in favor on the US dollar Japanese yen. So that's it for today, guys. Short and sweet, very to the point. We have a lot of news out today, guys, and the euro at 7 o'clock GMT this morning, German retail sales figures month on month were negative for the German markets. They're expecting a positive 0.3%. It came out at negative 0.4%. So almost a full percentage down, which is not a good sign. Later this afternoon, we have, what do we have? Sorry, this morning we have the Italian quarterly unemployment rates, which is going to be quite important. We have net lending to individual month-on-month figures for the sterling market or cable. We have CPI flash estimate year-on-year figures for Europe, which is really, really important. 10 o'clock GMT this morning. We also have the unemployment rate for Europe at the same time. Then going into this afternoon, we have CAD GDP month-on-month figures for CAD, which is important. And then a bit of US dollar news, core CPE price index month-on-month, personal spending month-on-month, Chicago PMI, and the revised consumer sentiment for this afternoon for the US market. So there's a bit of news out there today. See how that's going to actually reflect on the charts and trade accordingly. But end of week, we could see a bit of a consolidation later this afternoon from 4 p.m. onwards. But as it stands, there's a bit of news out. Be aware of it, factor it into your trading, and keep it really simple. Follow principles, back it up with sound money management, and as I mentioned, and I'll keep mentioning to you, keep it as simple as possible. Otherwise, have a fantastic weekend with family and friends, and I'll catch you nice, bright and early on Monday morning. Until then, you guys trade serenely.